Okay, ladies and gentlemen, let's get this party started. FOMC in the next 10 minutes. Powell will be speaking 30 minutes after. He's going to be revealing if the US is going to keep increasing interest rates. Well, the Federal Reserve, if you know what I'm saying. We're about to witness some flavor in the charts. Bitcoin's either going to go up or down, but maybe Bitcoin being held so long could be getting ready to take a few vector candles. Now, if you are new to the channel, sit back, brace yourselves. Let's have a conversation. All right, and gang. So, in front of you, we have Bitcoin to the left, dollar to the right. And these are the two assets we're going to be focusing on right now. If dollar goes up, then that means that the marketplace, in essence, ain't liking what Powell has to say. We're going to be paying close attention to one of our dearly beloved, the yields. Word on the street is that 6% could be on the cards, like a crazy number on the 2-year. 6%. Oh my days. Like, it's a wild one, but I'm just saying, we got to be focusing on this bad boy right here. Let me expand the chart. All right? More so. When dollar goes up, investors usually seek the haven of cash. That means euro will take a nosedive. Wipe that. Okay? And all assets paired against the US dollar will drop. Now, we've got to try and work out what has actually been happening. Well, where are investors' heads at? Problem that I've got is gold seems to be climbing. And gold is usually deemed as a safe haven. So if investors ain't liking what's going on, they'll go to gold. Now, what we've got to be careful of is what Powell says in the press conference. That will be 30 minutes after. So we're going to get the FOMC statement, and then we're going to get the interest rate. Word on the street is 5.5. Now, if the statement suggests that we're going to increase the interest rates yet again, the market might not react accordingly. But it's okay. Google smashes their estimates. Microsoft, not so good. But what I'm trying to say to you guys is investors, or should I say the market, would already have priced everything in. Now, whatever happens now is effectively going to set us up for a rally. Interest rates are high enough anyway. What can we do? There's nothing you can do. 5.5, 6, maybe. Who knows? But anyway, what's going on, guys? Are we all good? Just checking in with you all. Pump, then dump. Party initiated. Yes, that is correct. Now, if you are new to the channel, good old little red subscribe button ain't gonna hurt you. Will Smith that like button, ladies and gentlemen, and get with the flavor. Now, look, I'm going to be bringing up Powell. He's going to be sat in the top right there, guys. And we're going to break it all down. I'll be playing it. And I'm going to try and decipher what he's trying not to say. Because he's got a habit of, like, diverting these questions that he gets asked. All right? I'm looking for the Wall Street Journal to ask him one of those messed up questions like they did last time. So we'll be diving into that very shortly. Now, EXO Charts. Let's just bring this up. I haven't got my book map available right now. So this is where we are. Bitcoin. Bitcoin has gone nowhere today. All right? Which is good news. I would have preferred Bitcoin to drop, because if Bitcoin dropped aggressively, we would only assume that it's getting ready to go up. None of that has happened. Bitcoin right now is still holding around the point of control and in near enough around the VWAP as well. Okay? There's a balance. We've got two zones, top side and then down here. The statement is going to reveal everything for us, okay? Now I'm going to go over to live order flow. Where are traders at right now? Look, it's disappeared. Everyone is sitting back. It looks like cryptocurrency guys are understanding that trading the news might not be such a good thing. Look at the volume. Nothing. Futures 25 mil, 30 mil, 10 mil, 26 mil, spot 15. Someone's just stepping in and like, I'm going to buy a little bit of Bitcoin because Powell's my good old friend. Man, come on. 11 million on spot, another 11 million, two purchases of 11.9 million right there. Interesting. Let's go over to the high block just for a second to see if anyone has actually put hard money down. Has it increased? Ooh. Now, if you remember earlier on today, the lines were more yellow. That means some people have been taking positions off, okay? So people are starting to take some money. They probably think Bitcoin's going to shoot up. But let's just check out what the 7-day looks like. Let's see if that bad boy has added up. Mad love for everyone passing through, man. What's good? I'm long in 28,650. Okay. So you are long already, or you're going to wait for it to drop down there? Interesting. This is my problem. This. It's too close to price. And the FOMC statement, before the statement, right? Before it, Bitcoin could spike up, spike down before the details are released. And that's usually in the next 3 minutes. Usually, he says. Usually. Let's see if this bad boy plays out. Let's see if they get the vector candle because they haven't tested anywhere yet. But the psychological low would be the logical point for market maker to send price towards if he has the flavor to sell, okay? We're looking for the idea of Bitcoin hopefully coming up because now is the time for it, okay? Let's see if that's going to be the case. Like, guys, look, how many of you are in trades right now? How many of you are actually in a trade, long or short? Type 1 if you're long, type 2 if you are short. I really want to see what the flavor. Yes, V-shaped play could be on the cards, guys. We're going to wait for the absorption of the statement. Let the statement come out. And then we would effectively have 30 minutes to witness the madness. I ain't even trading this. No chance. If I was going to trade it, I wouldn't have gone live. You need to get in the zone, man. You need to be there, watching, trying to find everything. What we got? We got ones, twos. I'm seeing more ones. Not really seeing. I'm seeing zeros. Simple instructions, sir. It's 1 or 2. What does 0 mean anyway? So you're not in any. My bad. I apologize. I just done myself clean there. Wow. Sorry. I didn't even. Yeah. Anyways. So I'm seeing a lot more zeros now. Well, a lot of people are long. Okay, I'm trying to get this. We got 2 minutes, ladies and gentlemen. It's going to be very interesting. How many of you are waiting for 0, nothing, or hedge? Fair enough. Who said what? Both ways? Okay, if you're swinging both ways. No, I didn't mean that. You get that. Yes, trading FOMC is sort of a gamble, let's be honest now. It is a little bit of a wild horse. And we've just got to really say, look, you have all the time in the world to trade. Why are you picking today when the ranges are going to get slapped up? You're going to go in with your hybrid system, with any system you're using, and say, I'm going to exploit this. Everyone is anticipating the news right now. Okay? They're waiting to see if we're going to keep increasing interest rates. And that's what they're saying that they're going to do. But it's the tone. We're looking for Powell to be hawkish. If he's hawkish, then the market is going to give us the proof that they don't care. Because that's two things we've got here. If Powell's going to be bringing bad news, the market might show it doesn't care and it keeps going up because that's what the market's been doing since December. So we've got to be really careful. Here we go. Now's the time, guys. Now is the time. Here we go. Keep an eye out. FOMC statement. Let's just get dollar up. What's dollar doing? This is Bitcoin. Here we go. Careful. Careful. Bitcoin ain't moving yet. Dollar's not really moving much. I'm going to have to move this over here. We really need to be seeing if Bitcoin is going to do it or not. Here we go. Statement is out, but there's no response right now. Futures on dollar on the right, okay, is not really doing anything. Here we go. Are they going to come back down? Has this move been set up? Statement is out. No response. Dollar not moving. Here we go. Here's the magic. So far, so good. Bitcoin still holding out. We're going to see a little bit of a spike in a minute. Sit tight. Here we go. Starting to move up. There's the flavor. Is it going to go clear this value area high? That's what we want. Bitcoin going to come back into that red vector candle, but we've got to sit tight. Wait, because this is before it's actually being revealed. This is usually what it does. Be very careful. Powell is going to be talking very shortly. Nothing. Nothing has happened. Not interested in that. Where are we at? Where's Euro? Euro is not doing anything. It's like they don't care about the statement. That means Powell's going to be suggesting something. Let me just kill this off because we have got ourselves a little bit of noise in the background. No response. I don't know if that's good or bad. I really don't know if that's good or bad. Yeah, there's nothing happening here. 25 basis points. Okay, we expected that. We expected that. Let's see if NASDAQ and S&P are making a move at all. Well, does NASDAQ like that? I don't think so. Not doing anything. They're not doing anything. That means the statement itself has pretty much told us what we already knew. Okay? So there's nothing much happening there. All right, then. Cool. Let me move this across here. Can you see? Happy days. All right, now we're starting to get some movement. Here we go. All right, then. So they haven't moved up. They're just starting to work the range. They're trying to hold out this VWAP right now. If you notice over here, you can see this gray tab right here. That gray tab right there is pretty much people placing and cancelling orders. It's difficult to read, okay? But you can see there's more negatives than there are positives, which means that guys are effectively trying to cancel out certain sell orders, okay? Because the buyers are going to step in, because price is going to start lifting up. Okay, remember, on the left side, this is the bids. When they hit the bids, it means that passive sellers are stepping in, okay? When they lift the ask, aggressive buyers are coming in, okay? So we're going to try and work out. Dollar is still down, not moving, but it's still there. Bitcoin is doing fantastic. It is doing great, but we've got the press conference, which means that the press conference is going to give it all away. Right, your Ethereum. Doing really well. I'm happy with Ethereum. We haven't got no vector candle recovery just yet. It doesn't look like it's going to be happening anytime soon. Nah, it's too quiet. They're waiting for the press conference. Press conference it is, guys. Okay, then. So we're going to be getting that set up very shortly. We're going to go over and have our little chart over here. Can you guys see this nice and clear? Does that make sense? Yep, I'm going to be breaking it up. We're going to put EXO Charts over here to understand, and I shouldn't be in the way. Are we good, ladies and gentlemen, yeah? Okay, then. Look, the fact that the statement has only said 25 basis points, we already knew that, okay? What we're looking for is we're looking for Powell to say, we're going to hold them for a substantial amount of time. If he turns around and says that it's all going to be data dependent again, all right, we're going to see the unemployment rate go down, unemployment claims going down, and then up and then down. Inflation is going to come down in principle, all right? And they're going to be making that decision off the data. They're not physically saying that we're going to cut the interest rates or we're not, we're going to slow it down. That little word would induce a Fed pivot. That would be, in principle, a fiscal policy change, all right? History has it that when the Fed pivots and changes its fiscal policy, the market usually doesn't like it. And then it starts to pull back. So now money is getting cheaper, but the market's going to price that in, okay? Because it's still going to take a little while for them to drop the rates, all right? Here we go. Let me just move this across here. All right, cool. So now Bitcoin, no activities as such. Dollar's not really doing much for us. And I'm just waiting for it, Any questions, ladies and gentlemen? Any questions from you all? And whilst we're at it as well, this is the last time before you can join the Patreon, okay? Because we're going to be moving over to the website. And if you do join it, you'll get certain benefits when you get onto the website as certain members. So if you haven't done so, go check that bad boy out. We did a live stream today, straight after the live, and we do that every Wednesday. So you'll be getting that sort of flavor, but we're hopefully going to be moving over to the website so that we can host ourselves. And we might even say a trade or so. Because the problem is if you're trading, YouTube might not like that. That's another story. But that's what the plan is moving forward, ladies and gentlemen. So go check that bad boy out. And there's lots to learn in there. You get access to around 75 masterclass sessions. You know what the flavor is. Ask a friend, and they sure will tell you what the Patreon's like. Now, 25 minutes. Give me your coins, ladies and gentlemen. We're going to break up time as we get closer towards Powell speaking. Now, don't go crazy, and don't give me no mad coins either, all right? I want good coins with volume, liquidity, great white papers, coins like Pepe. That serves a purpose. If you're bored, you buy it. That's a purpose. I'm joking. So, whilst we're at it and we're waiting for Powell to relieve the conversation, let's just go over to the live order flow to see what's been going on. Look, again, nothing. And I always say this, right? MATIC is a boss coin. I love MATIC, right? Look at how it trades. It just trades so well. Look at this. Always got time for MATIC. Such a beautiful coin, all right? Right now, okay? Whoa. Sit tight. Slow down. I ain't going to get to see your coins. Slow down. Oh, my God. I ain't ever saying that again. Forget that. No chance. I might. It all depends. But MATIC right now is currently showing a little bit of volume. We're about 17 million. I've got this set so that it shows me volume above 10 million. I'm not interested in anything below that, okay? But MATIC seems to be holding it out. Anchor at the same time. So just going to MATIC. So look, listen, if Bitcoin goes up, everything else is going up. So we've got to look at the ranges right now. Look at how MATIC has come back into this zone over here, okay? So this zone right now is an area of support, right? Or where the liquidity was previously. So market maker, in essence, is going to tap that zone, which he has done, and he's moved away from it. Principle says we would expect it to continue to move away from that zone, okay? Next coin, egg. Now, I'm not looking for egg coin, bro. Dot, let's have a look at Dot. Egg coin, man. These guys, madness. Here we go. Again, the same. Oh, okay, let me put it like this. Can you please type? This is where you got to step in as well, man, because we got 25 minutes before we actually listen to Powell, all right? I want you to find me in the chat, type it in now, coins that are above the 50 EMA on the 1 hour time frame, okay? Find me coins that are above the 50 EMA on the 1 hour time frame, then we'll have a conversation. Dot right now is currently trying to give a green vector candle to appear above the 50 EMA on the 1 hour time frame. You really want to wait for this to close above it, okay? Keep an eye out on these red vector candle zones right here. Structurally, I'm not really liking it because there's no volatility with it. That's why I want an asset that's moved away from the 50 EMA. Rose. Okay, let's have a look at Rose. USDT. Here we go. Above the 50 EMA. Okay, sort of. When I'm saying above the 50 EMA, I'm talking about like this, when it's moved above it like that. Smith, how you doing? EGLD. Man, you guys are going crazy. EGLD. Okay, then cool. Rose has tried to break the vector candle already, so that's a good thing, that is. EGLD, let's go for it. Oh, my days. Okay, look. Oh, a pain in the back, right? When it trades like this, not above the 50 EMA, trading sideways, you're effectively at a coin toss because you're waiting for the first bout of volatility. This is where you get the clue. Look at this. You see this move here? It doesn't clear the 50 EMA, weak volatility. You are looking for a clean break above the 50 EMA, but because you're already at the 50 EMA, you're looking for the next moving average, because if it can break above the 200 EMA, retrace back into the zone, they would effectively be holding out with the 50 EMA in that area, and then pricing principle would look to try and continue up to eat the liquidity on the left of the chart. Next, let's have a look what we got. Solana, you actually said Solana as well, my guy. Hold on a second. Solana. There you go. Solana's done a nice move. Look at that. Beautiful. Okay. First green vector candle above the 50 EMA. That would have been your long. I know I'm saying it in hindsight, but you guys always hear me talking about these bloody vector candles because they are clues to how price can move. They can't move it out of nowhere. These are the orders. They slowly drip it into the marketplace. Look left. Did they set it up? Yes, they did. Now it's made a way back up. OGN for Sophia. OGN for Sophia. Who's Sophia? Okay. Look at that. There we go. Beautiful. Above the 50 EMA. Now we've got a clue. Okay? If the news doesn't come in favorable, OGM will drop and they will come back to the vectors. Okay? Keep a close eye on the 1 minute time frame and pay close attention to how, during the news, this is not me telling you to trade. I'm telling you what to be aware of, because you'll then go into your trading on a normal day-to-day and you'll start to see it. Look at how fast the candlestick moves, okay? Notice how it wicks down and up, all right? Focus on the closes of the candlestick. If it's closing stronger down and it's trying to go down lower and faster, means that the news is probably bad and they're going to try and go. Look, here's an example of it. Look, it's not doing it so much, but look, it just came down at speed, quickly come back up, but it didn't really bring it back up enough, okay? So there could be a start of something here, all right? Keep an eye out on that, all right? What have we got? Casper USDT, anywhere else? Casta or Casper? What is it? I've missed it. Sorry, bro. Oh, I had it there. There we are. Here we go. Cool. Higher time frames above 50 EMA. Yes. Yes. Nice. Okay, then cool. So what we've done is effectively moved up here. We're trying to get that zone, but look, green vector candle right here has moved price up, but it hasn't gone anywhere. So I'm a little bit concerned about that, all right? Powell only needs to say something bad to bring price down, all right? And that could have been the clue right there. MKR, let's have a look. MKR USDT, 12 minutes past. All right then, cool. Same again. Look at this, beautiful. 50 EMA, trading above it. This is strength. Look at to the wick, and you've got a very interesting zone all the way up here. We go into higher time frames. Zoom out. They need to clear 1,295 to suggest a continuation, a nice move. Because what have they done? Look, tap, 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 and made the run. That's the next point to tap. Do you remember that live stream yesterday when we were talking about Bitcoin making a move higher, coming back down, leaving the clues to what they could be going for? Why? Because this whole area is full of stops. And then, of course, you do a nice little W formation, shift out to the upside. So given that we had a big move up, they've already retraced. Now we've got a continuation up. This principally could be a little level 1 going in for a level 2 rise. Okay, what have we got here? Comp, please, is moving up solidly. Let's have a look. Comp USDT. Happy days. Right. Comp. So any retrace, green vector, that's good news. Hasn't closed above the 50 EMA correctly. And in my opinion, the 50 EMA, I class the whole thing, the cloud, because the 50 EMA is the blue line. And I use the blue line to tell me if retail traders are reacting at it, right? But I use the whole thing because if price can get above the 50 EMA here, this could be a sign of weakness. Why? Because the green vector came up, but it didn't close above the cloud. And the wick didn't finalize at the top side of the price. All right? So the logic would say that we could be entering into a sell zone where price would, in principle, create M formation drop. But that's only if the news is bad. That's the thing. And that's the worst thing about this. All right? I would be gearing towards a drop because they've been marking price up and they've stalled inside of this zone. Okay? What else have we got? WorldCoin took a picture of my eyes, man. Dang. Oh, okay. Happy days. All right. Is Bitcoin doing anything? All right, cool. Bitcoin's making a nice little move. Here we go. Here we go. We've got some movement. Hold on. Bitcoin's doing the structure so far. So good. It's cleared the zone. That's good news for us. All right, that's good news. Now, it's good news and it's not good news in essence. Let me just quickly go over to the calendar and find out what they're saying in the statement. Issues the statement. Recent indicators that economic activity has been expanding at a moderate pace. Job gains have been robust in recent months. That's a little bit of a problem. And the unemployment rate has remained low. Inflation remains elevated. All right, then. So that pretty much dictates what we're going to be expecting from Powell. Still, inflation is the problem. Still, 2% is going to be the goal. And still, yields going up. Okay, then. That's an issue for us. What else we got? Zen. Let's have a look at Zen. Zen. Nice move up on the 10-minute time frame. A lot of altcoins are creating a beautiful pattern. Look at this. Beautiful structure. Rise up. Retrace is what I want. Continuation. Take out the highs over here. $9.60. I mean, look, listen. This is the only time, in principle, that Bitcoin has to really make the move and continue. If you go back and look at all the FOMC meetings, look at what had happened during the meeting, and then look at what happened afterwards, all right? Because we're in this cycle of quantitative tightening, everything's getting tight, money supply is a bit of a problem. We're going to be hoping that they change that, all right? Just look at how the market reacts to it. The market's been buoyant, full stop. All right. Even JP Morgan said they got it wrong. So there's your story. What else we got? Gold. Let's have a look at goldish. How many guys in here? Forex. Look, again, terrible, horrible range for gold. Stop, run up and down. You don't trade these zones. You don't. But I will tell you this. Whatever happens with Powell, Asia will react. Asia's going to bring some pain. I'm telling you, Asia's going to bring the flavor if the information isn't good. Link. Going back into gold. Gold, I discussed it with the patrons of the channel, all right? This is level 1, level 2, but we've come back into it. We are effectively at a high point in gold. If you look on the higher time frames themselves, I've got all my drawings, and I leave my drawings annotated, but you can see how we've got a cycle right here. There's a cyclical move, and we're currently in this formation, which is going to dictate if we're going to go on for a level 3, where gold will peak out at this point to come back into the vector candle recovery at 2012, or it's going to break down. Again, Powell is in control of this, okay? ASTR, USDT. Give me some stock. Anyone want any stock? Any stock? Okay, so ASTR is doing awesome. Look at that. Coming up to the 800 EMA. That is very good on the 4-hour time frame, 1-hour time frame. This bad boy has not stopped. But be careful. Be very careful. Why? Because we're coming back into the same zone that we dropped from. Okay, so a clear break above 0.5, it's about 5 cents would be valid to assume that this move here, this structure of consolidation, is going to lead to a move up to consolidate again to continue to the upside. Okay, let me have a look at Euro for a second. Euro, again, it's in a level 2 consolidation. All right, this is a level, right? This is a level. We're waiting to see if the level is going to confirm. And you know something? The market might not even move. There is that possibility as well. They did it last time. Powell didn't really talk much, and the market didn't do anything. And later on, they decided to roll with the flavor. Okay? What else have we got? Let me just have a look here. Is there anything coming in here? Let me just have a look at, comp is up there right now. Bitcoin's coming back down on a 3-minute time frame. That's not very good. I don't like it. I see what I mean, man. Futures, some people just went long on Ethereum. Sad days. Let's go to Ethereum. Where are we at? What time are we on? 10 minutes time. See, again, look. Here's a little bit of school. Ethereum has perfected. Look at that, man. They just come up towards it. Tap the moving average. If you remember in today's live stream, I was talking about how traders who are trading the golden cross or the death cross, they just got buoyed. All of them. They got triggered. Why? Because they went short over here. They didn't pay themselves. They tried to go short again, and then they paid the price. Now, the same guys that have taken longs on the break of this area here are now also paying the price. All right? This is why we don't trade news, because this sort of shit happens. All right? Forgive my French. XRP. Let's have a look at XRP. I don't know why I feel like this about XRP, man. It gave us that little bit of excitement and nothing's happened after that. They just dropped back down again and held the zone. I mean, if XRP stays as a stable coin like this, then fine. But I'm not liking this imbalance. I don't like it. This is what I mean. In my head, I think to myself, if the markets or the market maker knows what the story's going to be, he'd be marking price down sooner rather than later. All right? But then I guess it's all about making people do something, get them to commit and step in. When price is trading sideways, we only got to go over to this thing right here and have a look at the levels. The levels themselves are going to show us exactly where people's heads are at. Look. Oh, my days. Look at these. Is it 100x? No. Yes, it is. 25x. Wait. These are 50x traders. The turquoise blue. Turquoise blue. That's like saying the black green. This guy. $517 million worth of short liquidations at 29,522. All right? 29,522. Let's take 29,522. Did they just take that? 29,522. Oh, my days. They just missed it. They just missed that liquidity. I wouldn't be surprised if they go back into it. Go into the smaller time frames. Can I show you what happened on the last Fed talk? Let's go into the last Fed talk. Then that would be where we got. Here we go. The press conference, June 14th. Right. Let's go to June 14th, ladies and gents. Here we go. June 14th. Where are we at? June 14th. All right. So this is where we are. June 14th, right here. So look what happened. June 14th, 5 o'clock, Bitcoin takes a dump. All right. Sorry, 9 o'clock, Bitcoin drops. So after FOMC. So it really didn't do much. Okay. Didn't really bring no flavor. It drops down. Okay. Then Asia decides to follow on into the next few sessions. All right. So it continues. So this is what, in essence, what we're looking for. We're looking for the drop. That's what we want. And the only reason that I want the drop, ladies and gentlemen, is because this imbalance right here, it's a problem for me. Bitcoin needs to eat that liquidity. And the sooner they eat it, the easier it's going to be to believe that the price is going to come back up. Because then they would have retraced the whole thing. And that would be good news. That means it will be cheaper to pick up Bitcoin. All right? Where are we at? Okay, then, ladies and gentlemen. We've got 7 minutes before we do that. Link. Let's have a look at Link. Get Link up for you. Link USDT. Okay, then cool. So Link seems to be holding out in the $7 zone quite significantly. Big move against the 50 EMA. And again, look, altcoins, go and do this, right? Look, this is the altcoins chart. Okay. The altcoins chart is saying that most of the altcoins on the 1 hour time frame are below the 50 EMA, right? Or trying to get above it. So those altcoins that are above the 50, if market starts to move up, they will be continuation coins. So the money will start coming in and they will continue to move up. The altcoins that aren't moving up yet and sat at the 50, you need to wait for them to break above it. Come back into it to go. We all on the same page, yeah? Cool. J Engine Coin. Here we go. See, look, this one's taken a bit of a battering. I'm not liking it. It's way below the 50 EMA, so you really want to be looking for a structure here. You really want to see it try and consolidate, back up, go down. Do not take the first move up. Do not take the first move because they will come back down. Why? Because they're leaving the vector candles right here. You see that? They're leaving the clue. If they don't recover that straight away, then there's an issue. All right? What have we got here? Our green and blue hourly candles on Bitcoin telling us they're accumulating for long positions. Let's go back into it. And, okay. So look, this is where we're torn, okay? This is the 29,000 zone. And this principally is the 30 zone, right? What could they be doing? What could they be building more of? Are they building more shorts or are they building longs, right? These fast moves up, okay, and instantly bringing it back down, it's kind of giving me a clue that it's like they don't want price to go too high. They want to keep it within a contained zone because market maker builds his shorts above key notable areas. What's a key notable area? It's a whole and half number. Look at the 29 zone. If you've got an investment, okay, and you want to sell it, you're going to go to an auction house and you're going to hover around in the auction place saying, I want to find someone to buy it, to effectively sell this to. Is there anyone? Is there anyone? Yep, bang, give it to me. Cool. So you've built all this interest. You found your buyer, bang, you sell it to him, rip, it goes down. That's what market maker does. He picks up his sell orders inside of this range, and he logically moves the chart in one direction to make people believe we're breaking out to then come back down. That's what this is right here. We're waiting for the fake breakout. Okay? 4 minutes, ladies and gentlemen. Let's get with the flavor. Are we happy with that? NASDAQ analysis. Okay. Actually, before we do that, we'll go into a little bit of a stock. Hold on a second. NASDAQ. Ugh. See, now, NASDAQ. Look at this. Look at this. It would be fitting for a Fed pivot at this point now, wouldn't it? Because they've got every reason to believe that. This climb since April, it hasn't stopped. Stocks across the board are killing it right now. Look at Google. CAVA, sorry. No, let's go to NVIDIA. Look, man, we spoke about this at $238. And I said, this ain't even at its peak yet. It's not even at its prime. And there were a couple of comments like, what are you talking about, man? That ain't going nowhere. Go back in the channel, man. You'll find the video on NVIDIA. Look what it's done. Silly moves. 142% move from its pivot over here. 27 weeks. Man. Do you see what I mean? So there's got to be some profit taking happening. Now, NASDAQ is starting to come down a little bit. Okay? They invalidate this zone. They're going to be taking this liquidity. And Powell's going to be the culprit that does that. Okay? So just be very careful. Look, too much deviation. They need to bring it back into the balance. All right? Let me just go over into that. Bitcoin. Now Bitcoin's coming back down. So let's just remove this. Okay, then cool. All right, ladies and gentlemen. Let's get our headphones on. Where we at? I'm going to bring this up here. And we are going to listen to Powell. Right. Can you guys hear this? 3, 2, 1. Are we good? Can you hear it? Let me know. See, Bitcoin's starting to drop now. What is this music, man? Right, I'm gonna try and zoom in. That'll work. Okay then, ladies and gentlemen, it's about to go down. 1 minute. Let's roll with the flavor. Yep, happy days. Let's go with it. Bitcoin live. Can you put on a Bitcoin live chart? There is that. That's Bitcoin there. That should work. Happy days. There's Bitcoin on the 1 hour time frame, ladies and gents. Let's see what it's doing. Currently priced at... we'll leave it at that. That should work. They need some of my music. Yes, they do. I should be the DJ for the Fed. Come on, pal. This music is wrong. So look, listen. I'm looking for Powell to effectively say, we're done with increasing interest rates. That's what I'm looking for. If he starts going on about, well, it's all going to be data dependent and whether we decide to cut it or not, they're just prolonging it. All right? Bitcoin will show its true colors. I'm hoping that Bitcoin does come and take the red vector candle. That'll be nice. But it's all going to be on what this guy says. Make some noise for Prince Powell. Yes. Bookmap is not there for me right now. It's not working. I've got EXO Charts right here, which should give us a bit of a move. Hold on. There you go. I'll move up my desk so you guys can see level. Happy days. All right, then. Cool. This music is how he explains things. Yes, it is. Here we go, ladies and gentlemen. All right. Let's sit tight. I say, right, $50. He walks on and flints. He did it last time. Where is he? Come on. Here we go. I laugh at this guy. I love him, but Flint, has he done it? There it is.
Good afternoon.
Here we go.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 1/4 percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt.
Wow.
Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate.
Data again.
I'll have more to say about monetary policy after briefly reviewing economic developments.
Here we go.
Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace.
This guy's boring.
The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%.
This is boring
Inflation
stuff.
has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation.
He ain't said nothing.
We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are
Here we go.
strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings.
Said it twice.
With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks.
Meeting by meeting
We remain
again.
committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
Markets
To conclude,
going up.
we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Okay, so guys, didn't say anything we didn't already know. NASDAQ's making a
Mr.
move.
Chairman, thank
Bitcoin is
you.
yet to make some flavor. So
I think a couple times in your opening remarks.
let's see what these
talked
questions
about this
lead to.
language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the
Here we go.
way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider
This is NASDAQ.
hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change.
Looks like a stop run on
and
NASDAQ.
The June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance.
I'm on Bitcoin.
Including in particular in the labor market. We'll be looking at inflation. And we'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting. And how
another
we're thinking
increase.
about meetings going forward potentially, but we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting.
Hold steady. That's good news.
I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period
CNBC.
it broadly came in
Here we go.
In line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina.
Here we go.
Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth.
New
in
York
the statement
Times.
Today, we've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far
Mention
without
Barbie.
any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
We know Dixie's dropping because Bitcoin wouldn't move if Dixie was going up.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports.
Here we go.
Still strong but moderating. JOLTS looks good. So if you're data dependent,
the recovery not
why
cleared
not
it
pause
yet?
again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step. And that's a labor market that continues to be strong, but gradually slowing.
Yeah.
I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading.
I haven't got a Barbie top
growth
on,
came in
man. What are
stronger
you
than
talking
expected.
about?
So that's how we look at it, and so we did take that step today.
Thank you. So we've had a little move. Nothing much yet.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
He hates Wall Street,
man.
man.
Pieces apart and say, how much of this and how much of that. We'll be looking at everything, and of course we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at
he keeps
two
parring it
additional job
off,
reports,
man.
2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is, is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Chris.
Not that much from Wall Street, to be honest with you.
Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now, after trailing them for a long time. How much are Americans truly
Why would he
harmed
take a
by
picture
inflation
at the
at
back
its
of his
current
head?
level,
Oh.
headline level of 3%?
Okay.
And with that in mind, when do you put some
Anyways.
weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move
Okay.
down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you are really, sorry, what your question was?
Well, I mean, you talk for many press conferences now about the harm created by inflation,
Classic
how hard it is
Powell.
for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say
He's
it this way.
forgot.
It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. And, I would
Sorry,
say
that was funny.
we're coming to a place where there really are
sorry.
risks on both sides. It's hard to say exactly whether they're in balance or not. But as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we
They're
think,
not-
and most
he's not
economists
saying
think, that
much.
core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think, core is signaling where headline's going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time.
Oh,
And we need
see
to be
how he
prepared to
slurred
raise
then.
further if we think that's appropriate.
He knows that the market's going to
if
react.
inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to
This is
get
important.
that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last
So
1 point?
it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
There's nothing for us now, guys. NASDAQ's made the move. Bitcoin's pumped up. We're going to get into some
At this point,
price
you
action
say,
in a few seconds.
The policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the
Hey,
downside,
to the
and
upside,
inflation lately
downside.
to the downside. So I'm
Hey.
wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now? Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
Here we go.
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market.
Boring.
And all of that should lead to declining inflationary pressures. Now, what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects.
Oh, wow.
So we intend, again, to keep policy restrictive until we're confident that inflation
everything's
is
coming down then.
Sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
Colby.
Oh, man, it's not done much, guys.
Financial Times.
Here we go, Financial Times.
Is in fact a live meeting. How does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
That's big. Live meeting.
A more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was
I think we're going to see some movement now.
Cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that, and I think it'll sort itself out.
This guy's telling us what he does at each meeting and what he's planning on doing. That's
Howard
irrelevant
Schneider
for me.
Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to.
Right, okay, ladies and gentlemen, okay? We just need to understand something, right? Anytime he's asked about how long you're going to keep interest rates up for, he says, we've got to bring it back to the table. We've got to bring it back to this. It's the same shit. Data, a meeting-on-meeting basis. Now, the next FOMC is, in essence, going to be a live one. All right, so we're going to hear them all talking and discussing about what the next flavor's going to be. All right, Powell's just by himself right now. Okay, now all these questions that keep getting asked is just a runaround way of finding out, are they going to keep increasing interest rates? Has the market sensed the idea that they're going to effectively stop? And they haven't. So the market is back to business. Check this out. NASDAQ has made a nice little move to the upside. Okay, problem is, it's starting to pull back. It's a nice little stop run. The start of the next green vector candle in the next the next candlestick in the next 6 minutes will tell you if this move is going to be valid, if they like what they've heard. All right? Moving on. Dollar dominance. It's come back down. But my problem is it going to come back up because it hasn't broken anything significant just yet? It's taken out this range right here where we would naturally expect price to hold out because we would always want a retrace anyway. Okay? Now, the yields, they've come down, but not as bad as we'd want them to. We need this to drop down to 4% to suggest that things are all good to start picking things up. But then you look at the stock market, everything is shot up. So where's the money going? Okay? Or is it going anywhere? People are selling right now. Okay? Going into the 10-year bonds, they're reducing the balance sheet. All right? Bonds are starting to move up. They've told us the same shit before. Tesla, not really moving. Microsoft, still down. Google, still up. Hasn't closed the gap. So there's not that much of a response. Gold makes a nice little climb to the upside. Going into euro, she comes back up, but we expect that anyway. So it's like, what have we been waiting for? XRP has moved up nicely. It's coming away from the moving average. So with that being said, why hasn't Bitcoin really moved? Well, we need to now go into the lower timeframes, guys, to understand if they are going to get the party started. If it's business as usual, Bitcoin is going to continue with this stop run. Psychological low would be on the cards. I would expect this to come into play, okay? We're going to know exactly what that flavor is, all right? Cool. What are you guys saying? Today's talking... Talking loud and saying nothing. I guess that's the case. All right, then. Ladies and gentlemen, again, one more time. The vector candle has been, in principle, recovered, okay? They haven't made it to the psychological low just yet. Asia will give us the heads up on whether they like what they've heard. But we heard the same thing before, okay? Remember, ladies and gentlemen, last time to join the Patreon, so go check that bad boy out. And you'll get new benefits on the website when we move over to that place. So those of you who become patrons, you'll be tallied up and you'll get a certain benefit when you get over there. I told you earlier on what that was. Guys, mad love and respect. Have yourselves a good evening. Trade safely. And I'll be checking in with you all tomorrow morning. Peace.